The cannabis industry is rapidly expanding, fueled by increasing legalization and shifting public attitudes. As more regions embrace marijuana for medical and recreational use, investors are seeking ways to capitalize on its growth. But can cannabis investing be a sustainable passive income source? And do index funds offer a safer, more diversified approach? The growth of the cannabis industry. The global legal cannabis market is expected to surpass hundreds of billions of dollars in the coming years. Countries like Canada and Germany have fully legalized it, while U.S. states continue to pass laws allowing medical and recreational use. This expansion has created investment opportunities, but also significant risks due to regulatory challenges and market volatility. How to invest in cannabis? There are three primary ways to gain exposure to the cannabis market. Individual cannabis stocks, companies that cultivate, distribute, or sell marijuana products, such as Tilray, Canopy Growth, and Curaleaf. Marijuana ETFs, exchange-traded funds that track a collection of cannabis-related stocks, reducing single-stock risk. Cannabis-focused index funds, broad funds that include marijuana-related companies among other holdings. Are there cannabis index funds? Traditional index funds, like the S&P 500 or Nasdaq Composite, do not yet include major cannabis stocks due to federal restrictions. However, cannabis ETFs function similarly to index funds, offering exposure to the sector without the risk of picking individual stocks. Some well-known marijuana ETFs include ETF MG Alternative Harvest ETF, MJ, the largest cannabis ETF, holding global cannabis stocks. Advisor Shares Pure Cannabis ETF, YOLO, actively managed, focusing on the U.S. and international cannabis markets. Amplify Seymour Cannabis ETF, CNBs, invests in companies with at least 50% of their revenue from cannabis. These funds provide diversified access to the marijuana industry, mitigating the risks of investing in a single company. Can cannabis investing generate passive income? Investors looking for passive income often turn to dividend stocks and index funds. However, most cannabis companies are still in a high-growth phase, reinvesting profits rather than paying dividends. While some firms may introduce dividends in the future, current cannabis investments are primarily focused on long-term appreciation rather than consistent income. Risks of investing in marijuana. Regulatory uncertainty. Federal restrictions in some countries limit market expansion. Market volatility. Cannabis stocks often experience dramatic price swings. Profitability concerns. Many marijuana companies are not yet profitable. Oversupply issues. Increased production can drive prices down, impacting revenues. Marijuana investing offers significant growth potential, and while ETFs provide diversification, they remain risky. For passive income seekers, traditional index funds or dividend stocks may be more reliable. However, if you believe in the long-term future of cannabis, sector-specific ETFs could be a way to gain exposure while minimizing risk.